Last year I hit a milestone that I thought was never possible. $1 million in trading profits using a simple, easy to understand strategy. If you're new to the channel, my name's Kyle and I've been trading since 2011. I spent 8 years testing different systems and learning new things only to lose money in the markets. That was until I figured out what I'm about to share with you today. A strategy that anyone can learn, is proven to work, and only takes a few hours of work per week. And if you want results, I've proven this by turning a few $1,000s into hundreds of thousands of dollars across multiple firms with some of the best metrics in the industry. Here's just a few notable mentions with some payout certificates. So if you stay till the end of this video, I promise you'll be on the right track towards making your first $1 million in the markets. All right, before we get into the actual strategy itself, what can you expect out of this specific strategy? Now, this is going to be up to you guys to go in and backtest and forward test and obviously get comfortable with the aspect of risk reward. But as you guys can see, these are just some of the results that I got from my students that tested this strategy over a certain period of time. And what we're really looking for is anywhere between a 40 to 60% win rate. Now, if you're getting something that's higher than that, that's great. But really, you only need a 40% win rate to come out ahead with this specific strategy. So as you guys can see in this first example, this person came out with a 35% gain over the course of a month and a half. Now, they might have been trading more aggressively. They might have taken a lot more trades based on the lower time frame, and they might have just had an overall higher risk reward. But really what you're looking at is a nice smooth equity curve where they don't have massive dips. And now that might be coming from them scaling into positions or trailing their stops, so they don't have massive losses. They might not be taking a full R loss as the trade moves in their favor. But that's a whole different video. But as you guys can see that, over the course of 25 trades, they had a 70% win rate. Now, this person may have been pretty selective about which trades they were taking, because that is a pretty good win rate. Now, this next example, though, you can see that over the course of maybe 6 months, they've only taken 10 trades. So this person was much more selective in the actual setups that they were taking, there's nothing wrong with that. All right, you guys have to figure out how frequently you want to be active in the markets, and also it depends on how quickly you can analyze the markets, because if you're missing some of the trades, then that doesn't really do us any favors. So before we get into any of the actual technicals about this strategy, we're going to just talk about the different time windows that we have to pay attention to. So we're going to use Asian session, which is, by the way, all these times are in Eastern Standard Time. So Asian session is from 8 p.m. to midnight. London sessions from 2 a.m. to 5 a.m. And then we're also going to take note of our previous daily highs and lows. Now, for the purposes of this video, I'm only focusing on NASDAQ, but this idea and this framework works in any market. You guys can go and backtest this if you want. But for the purposes of this video, the time windows that we're going to be looking to take a trade are anywhere from 9:30 a.m. up until 11 to 12 a.m. Usually I won't enter any positions past 11 a.m. So really that opening range is going to be extremely important for us. And we're going to go over a couple examples, and I'll show you guys how I personally backtest over a couple days. So first thing we have to understand is our fair value gap, market structure, and a liquidity rate. So for the fair value gap, this is only really importance for our stop loss placement. But really what we're looking for, let's say if we have a bullish bias for the next day and we think the market's going to go up, we're looking for a liquidity rate on any one of these lows. So if we have the Asian session, we need to see the low be ran out, or if we have the London session, we need to see that low be ran out before we look for a market structure shift. So that is step number one. If we don't get a liquidity raid, then we don't have a trade. Okay, no raid, no trade. Then we're going to look for a market structure shift, a displacement, fair value gap, and then we're going to put our SL plate. We're going to enter on a limit at the fair value gap, and then put our SL placement at candle number 2. Now you can use candle number 1 as a more conservative approach. So the one that actually started the fair value gap, you can use candle number 1. But for these purposes of this video, it's more of an aggressive approach, and I think, in my opinion, is a little bit easier to get a better risk reward out of. And in my opinion, I don't really want to see a strong fair value gap trade below this candle anyway. I want to see 50% of this level hold and then us trade away. So obviously, for a bullish example, we have our time-based liquidity. This is really what we're looking for. This might be the Asian range, this might be a London session, or this might be the previous day. So we're looking for a run above or below. So for a bullish example, obviously, we're looking for a run below that Asian range liquidity. And we're looking for a market structure shift. a fair value gap, and then we're going to set a limit where the fair value gap is created. So this is just an example of what we're talking about, just visually from going from, you know, this nice little infographic into an actual example. So as you guys can see on Thursday, if we had a bullish bias from the day before, and this is using a 15-minute time frame, you could drop down into a 5-minute if we need to. But you guys can see that we have 9 a.m. here. So this is really our open. This wick down here was probably most likely our open. We ran out the Asian range low. We also ran out London session lows. So keep that in mind. We ran that level out. We got a market structure shift above this swing high. So as soon as you get a closure, we have the fair value gap here. Now your entry is going to go where? Inside the fair value gap. And then the stop loss is going to go at candle number 2, which is this candle here, the low of this candle. And you guys can see that we didn't take that level. We might have chopped around in here for quite a bit, which is something that you guys have to get comfortable with as well, just having discomfort in your trades where you might get chop up and down like this. So let's say even if we entered as soon as it hit the fair value gap here, you have to sustain all this price action. So this might be a couple hours of sideways price action. And that's just something that, you know, backtesting helps with, but also forward testing. So very clearly, we're just looking for a 1 to 2 risk reward, and then we're done for the day. And I do have another rule in here that if the target is not met, let me write this down in here. If the target is not met by 4 p.m., close the trade. Because this is really a day trading setup, you guys can go in and figure out what time you want to have as far as if you're trying to trade a different time frame. Let's say if you're trying to trade a weekly time frame, this session-based liquidity might be Monday's range. So you might, instead of looking at Asian session, you might look at Monday's range and go ahead and backtest this, guys. Plot out Monday's range, and if you're looking for longs during the week, you're looking for it to take out the low of Monday, and then look for a market structure shift, fair value gap, and then a run higher. And your end of day or your time window where you would want to see your target met might be, let's say Thursday afternoon. You don't want to hold that trade into Friday. Most likely that trade is already nearing the end of its legs. So let's get into some of the actual backtesting examples and how you guys should backtest this model. So I am starting back in 2014. You can go ahead and use this same framework on any given time frame that you want. What we're going to do is look for a daily bias. So this is midnight on Wednesday, February 5th, 2014. This market is very clearly trading lower. We have a breaker here. So we've got this breaker here. We have a sell side imbalance here. And you guys can very clearly see that we are gravitating towards this sell side liquidity down here. So until we lose, you know, this buy side imbalance in here, I'm looking for shorts. So let me draw this out here. I'm looking for this run on sell side liquidity. And just notice I only have 3 drawings here. We're not looking for a whole lot. We're just looking for the next day, which direction the market might trade to. So what we're going to do is plot our Asian range. So we have 8 p.m. So 8 p.m. is here, 20. So this is our Asian range. And we can mark out this with Asian high. Put a line here if we need to. This will be Asian range high. So what I'll typically do is just skip to the next session. So the next session will be London session. All right, London session is now. We're going to go to New York session. So we can very clearly see that Asian range has already been ran out, but we are going to wait for the equity open at 9:30 a.m. So let's just go ahead and hit play, and 9:30 is right here. So no market structure shift bearish yet. We've already ran out the liquidity. Now we're not looking at any of this price action back here because this is off hours. Okay, so we have a nice visible swing low here. Got a swing low here. And what we're looking for a market structure shift is we need a closure below that low. If we just go and tap that low and then turn around, that is not a market structure shift. All right, that's just a run on liquidity. So we're not going to label that as a market structure shift until we get a closure below that level. Okay, so we have a market structure shift being confirmed here, and we have some displacement. So we do have this fair value gap here. And right now it is 9:50 a.m. So right around when we want to operate in the markets. So we're going to place a sell limit here, and then our stop loss is going to go above candle number 2, which created the fair value gap. And we're just going to aim for a 1 to 2. So we're going to risk 1% on this trade, save, and then we're going to hit play. So we have our run on the Asian range high. All right, we also have a run on this short-term high here. All right, we have our sell-side liquidity that we're targeting down here. So we got triggered in. You guys can see we almost got stopped out there, but our target's down here. Okay, so that's a very quick trade. It pretty much panned out in less than 15 minutes. So that was a 2R win in our favor. Now, usually when you get a trade like this that pans out very quickly, we're just going to skip to the next day. All right, so the next day is Thursday, right? We got a run on this sell side liquidity. So after we've ran out this major level of sell side liquidity, right? We got a nice daily close here. We're possibly going to look for some buy side liquidity now. All right, so my daily bias for the next day is this sell side imbalance up here. So we're going to do the same thing, is mark out Asian range liquidity. And I didn't mark out the London session liquidity last time, but we can do that this time. We have our Asian range here, and let me make this a different color. And we're going to go to the next session and the next session. So now we have our Asian range liquidity, and let's mark out our London session liquidity as well. So from 3 p.m. all the way up until 5 a.m. So let's see if, let me zoom in here. This is the high at 5 a.m. all the way till 2, just to make sure that we're getting the low and the high of that specific range. So we have London session low here, so we'll mark this out. And then we have our Asian session low. If you really wanted to, you can mark out both, but for this one example, they're very close to each other, so you don't necessarily need to mark out both. But just keep this in mind. We're looking for this buy side liquidity up here. Now let's just hit play. So here's our equity open here. Now we don't have any rate on liquidity. We don't have a rate on this liquidity. We don't have a rate on this liquidity either. And we ran to the daily target. So this is an example of you not getting the setup that you want every single day. We have to be patient and we have to wait for this liquidity to be ran out first. If we don't get a rate on liquidity before we get the run that we're expecting, then obviously we can't do anything. Now you could very well look at a lower time frame and say that there may have been a market structure shift in here, but we don't have a real run on liquidity because this is creating a low resistance liquidity run here. So this is just an example of maybe just missing a trade. All right, so it's hit our target pretty much straight off the open. So we're just gonna go to the next day. Now I believe this is Friday on the 7th of February. Now let me just check that there wasn't another Friday in February. Right, so this is Friday, January 31st, and as usual, the first Friday of the month is what? NFP. So this is an NFP day that we are going to study. Oh, here's our Asian session range. We're gonna go to the next session. Here's our London session. So we're gonna go to next session. And by the time I hit next session, NFP would have already happened. So here we go. Let's dive into some of this price action here. We have our London session, which is the high here to the low here, I'm most likely guessing. So as you guys can see, we ran out the Asian session low as well as the London session low. And then we got a nice big reversal here. Now, if you're looking to get in on this market, you may have already missed the move by the time you come to the charts because we are trading futures and we are mostly focusing on the equity open. Now, if we drop down into the lower time frame, I'm sure we could have found a market structure shift with a fair value gap. So either you're going to look at this one as a market structure shift. So if you do look at this one as a market structure shift and you entered on the fair value gap, let's say you entered on this fair value gap and you put your stop loss at candle number 2, you would have been stopped out there. But if you use candle number 1, you wouldn't have been stopped out. So it's just something to study going forward. If you were to take this one, however, let's say if you saw this one as the market structure shift, and then you use this fair value gap to enter, this is all ahead of the 930 open, by the way, which for the purposes of this backtesting, we are not going to be trading ahead of the equities open. So let's say if you were to take a long there, and I'm not going to place a position, but just assuming that we did follow what the strategy calls for. Our stop is going to be go below the low of candle number 2, and then we're looking for a 2 to 1. Now this is on a lower time frame because the 5-minute didn't really clearly give us any type of market structure shift. So we got a win and we missed a trade. We missed 2 trades actually because we didn't take out the liquidity the prior day on Thursday, and then Friday is NFP. You might not have wanted to trade. That would have hit our profit target based on the same framework. But we already missed both of those trades, so let's go to the next day. All right, now we got a really large run here. And coming into Monday, we're looking for maybe just the top end of this buy side liquidity to be ran to. So we're going to reset our charts here, and our buy side liquidity is all the way up here. So we'll mark out again. Let's go back to the 5-minute. Mark out again the low and the high from Asian session. So there's our Asian session range. I'm going to go to next session, go to next session, and then mark out our high and low from the London session. So 2 a.m. here, all the way up until where? I believe this is the low. So there's our London session low and our Asian session low. So coming to the markets at 9 a.m., right, half an hour ahead of time, we have a run on both sides of liquidity. And let's hit play. And again, we are waiting for equities open. So there's our market structure shift. Let's see if we get a fair value gap here. So we got a closure above that swing high. All right, now we have a fair value gap in our time window. Right now it is 9:40 a.m. This is our fair value gap. What we're gonna do is, once again, plot a long position here. Here, our stop can go below candle number 2, and we're aiming for, yet again, a 2-to-1. So let's see if we get triggered in here. Again, we're just looking for the premium end of that buy side imbalance. Now, we're not gonna chase that market higher, because based on our strategy, we're looking for the market structure shift, and then when we get that fair value gap, it's the one that really creates the market structure shift most often. So everything that we're looking for is, it's looking good. So we have a daily bias, because we want to see this buy side imbalance be filled in all the way. We've taken out London session low, and we've taken out Asian range low. And really, we're just waiting patiently for this order to fill. So we just got triggered in. Now, this is the uncomfortable part that you have to deal with. You have to plan your trade and just let it do its thing. Because if you're getting emotional with the ups and downs of the market, you might have seen this sell side imbalance, right? That might have thrown you off, but our daily bias is higher. So we have up until 4 p.m. before we have to close the trade, and another target hit. So these were just a couple quick examples of how you would go about trading the setup. Obviously, you're not going to get wins every single day. You might miss trades, you might mis-execute trades, but the framework is here for you guys to be able to make a really good living off of trading if you follow the steps that I'm outlining here, and you can analyze the charts properly. First of all, we have to come up with a solid daily bias that makes sense. And then secondly, you have to be patient enough to wait for that specific setup. Because there were times where, right, we didn't take out any liquidity, and you might have been chasing this market. But the problem is that if you try and do that consistently, many times you're going to get stopped out because there's liquidity down here that the market is going to try and retest at some point and then send it higher. So if you're constantly chasing the markets when there really is no setup for you to take, and you're breaking your rules, then obviously you're going to have a hard time trying to make money in the markets. But if you follow the exact framework that's laid out here, 1, liquidity raid. We need to take out some level of time-based liquidity, whether it's Asian session, London session, or a previous daily high or low, and then wait for the market structure shift, right? A market structure shift is deemed by a closure above a swing point, and then we have displacement or fair value gap that we're going to use as our limit entry. Our stop loss placement is either going to be candle 1 or candle 2, right? Candle 1 can be conservative, and based on some of the data we had gone through, either you were going to stick with candle 1 stop loss placement and maybe take a loss on that one trade, in which case you would still be up 3R over the course of how many days? This is only 4 or 5 days, just keep in mind. You would have been up 3R, which is really good, over the course of 3 days. Now, if you get extremely good at this, the 1 to 2 minimum, you can really find trades that are going much further than 1 to 2. But for the fact that you're trying to practice this strategy and get better at it, you want to start small and then work your way up. So if you can get comfortable with a 1 to 2 or even a 1 to 1, then work your way up. Don't try and go for a 1 to 5 straight off the bat, because it's gonna weigh on your psyche much more than if you're just aiming for low-hanging fruit every single day. So very quickly to summarize, liquidity raid, a market structure shift, enter on a fair value gap, we're targeting a 1 to 2 risk reward, and then if there's no raid, then we don't have a trade. So we're going to journal all our results and go in and do backtesting sessions and forward testing sessions and get comfortable with a 40 to 60% win rate. That's really the range that we're trying to operate in. We're not trying to do too much. We're not trying to do too little. But I would say that anything above 40% is the sweet spot where you want to be. And in my opinion, anywhere from 40 to 60% is typically where I'm operating on a day-to-day basis. There are some months where I'm not losing any trades. There's some months where I can't win any trades. All right, so it's long-term overall, I would say your win rate should be at 40 to 60%. There's some months, obviously, that are going to be much better than other months. But the key is to come to the markets consistently and follow the same process day in, day out without losing motivation or without being discouraged by specific losses that you take in the market. If you want to learn how you could trade this strategy live with me each and every week and get results like some of my top students here, then make sure you book a call using the link in the description. I'm only looking to work with the most serious students who aspire to become the next 7-figure trader. But if that's not you, just go ahead and leave a thumbs up, drop a comment, subscribe to the channel, and I'll see you guys in the next video.